Hello and welcome to Market Call. I'm Mark Bunting in for Michael Hainsworth today. For the next half hour, we have David Burrows, President and Chief Investment Strategist from Barometer Capital Management, and he's taking your questions on North American large caps. And here are the ways to reach us: the toll-free number, the email address, or tweet us at Market Call. David, good to see you.
Great to be here.
All right, so you've added from. Am I right? No?
Added, pardon me?
Oh, never mind. that didn't, okay, never mind. Well, I didn't say that. All right, so last time you were here, you were talking about some broad themes that were working for you and for your clients, such as energy infrastructure, dividend payers. Is all that still in place, or are things changing now?
I think that theme will remain broadly in place. And over the last 3 years, every once in a while, we get little upticks that people think may be pointing to an acceleration in the economy. You get a little bit of money rotating to slightly more cyclical securities. Every one of those over the last 3 years has sort of run out of gas shortly afterwards, and you get a reassertion of the dividend trade. And I think that underlying there is a very strong bid for that theme. I think that there is some money stepping out into some more domestically U.S.-based cyclical exposure, like consumer discretionary, as an example, and financials. But in general, I think that continues to be the dominating theme in this market.
So you haven't changed your strategy?
No, the strategy is always the same. Look for leadership. And I think that there continues to be very good leadership. I think that you're always massaging it and moving it ahead, and I think that there's some small changes that we can maybe talk about today.
Right. And what about what we're hearing about bond yields and interest rates and the possibility that some of the dividend payers that have done so well, they've had their time, they're rolling over now? Do you agree with any of that? I
think that it's inevitable that at some point you see long-term interest rates edge their way higher. I don't think it's inevitable that you get a V-shaped bottom and that rates move a lot higher. I think that we're still in a deleveraging world, and I think it's likely that rates are going to stay lower for a long time. On the first tick up in rates, you do see an impact on more defensive sectors in the beginning as some people rotate. But I don't think that we've seen a significant shift there. And I think that, as I mentioned, if you can find dividend growth, and I want to be really clear about that, it's not looking for the highest yields, it's looking for those companies that can afford to pay and where their ability to pay is improving. Growing dividend yield continues to be a very strong theme in the market, as you can see in, for instance, the pharmaceutical stocks, which we'll talk about today.
Right. One of your top picks is a pharma player out of the United States. We'll find out what that is later. Right after this, though, we'll come back with your questions for David Burrows on TELUS to start with and North American large caps in general.